Have you ever wondered how a single development can transform an entire community? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. In a recent report by Elise Franco from the Charlotte Business Journal, a global real estate firm has filed a rezoning petition that could lead to a major redevelopment in SouthPark. The proposal aims to bring new residential, office, and retail spaces to a significant property located at 6601 Carnegie Boulevard. This mixed-use project is set to reshape the landscape of SouthPark, introducing a dynamic blend of living, working, and shopping environments. The SouthPark area, known for its vibrant commercial and residential communities, stands to benefit greatly from this transformation. The redevelopment could potentially serve as a catalyst for further growth and investment in the region, enhancing its appeal as a prime location for businesses and residents alike. While this ambitious project is unfolding in Charlotte, it offers an interesting parallel to similar mixed-use developments in other areas. For instance, in Kitchener-Waterloo, Ontario, there has been a noticeable uptick in mixed-use developments that combine multifamily housing with office and retail spaces. This trend reflects a growing demand for convenient, integrated living and working environments on both sides of the border. As the SouthPark project moves forward, it will be intriguing to observe how it influences the local real estate market and whether it inspires similar developments in other regions. The potential impact on tenant leasing and investment activity could be significant, driving new opportunities and growth in the commercial real estate sector. In exciting news from downtown Dallas, Wildcat Management has announced a ground-up development on one of the largest land sites available in the area. The property, located at 1823 Cadiz Street, offers a significant opportunity for investors and developers alike. With its current use as a revenue-generating surface parking lot, the 0.67-acre site presents both immediate income potential and long-term development possibilities. Zoned PD 357, the site allows for a wide range of commercial and residential uses, with no height restrictions, making it a versatile asset for future growth. Additionally, its location within both the New Park Tax Increment Financing District and a federally designated opportunity zone provides multiple layers of incentives for investors. This aligns with favorable capital structures and positions it as an attractive investment. Wildcat Management has engaged Merriman Anderson Architects to explore the development potential of the site, which could include a 250-unit multifamily project, a 200-key hotel, and a mixed-use configuration integrating residential, hospitality, retail, and dining components. The concept studies illustrate the architectural versatility and scale the site can accommodate, offering a glimpse into its future potential. Tanya Reagan, president of Wildcat Management, highlighted that the property provides both immediate yield and an opportunity to participate in a city experiencing record levels of infrastructure investment and corporate growth. With the upcoming expansion of the K. Bailey Hutchison Convention Center and the newly approved Texas Stock Exchange, Dallas is poised to reinforce its status as a global center of commerce and investment. As investor interest in Dallas accelerates, Wildcat Management continues to expand its portfolio with institutional-scale offerings. The firm remains focused on projects that reflect Dallas's ongoing transformation and long-term growth trajectory, ensuring that sites like 1823 Cadiz Street contribute to the economic vitality of downtown Dallas and the greater North Texas region. In the latest update from the Charlotte Business Journal, Elise Franco reports that Charlotte's office market is showing signs of a robust recovery. Leasing activity has picked up significantly, and investors are once again demonstrating a keen interest in the area. This resurgence is marked by a series of notable property acquisitions in recent months, indicating a renewed confidence in the market's potential. The uptick in leasing and investment activity in Charlotte's office sector suggests a turning point for the market. This development is particularly important as it highlights a shift in investor sentiment, which had been cautious in the wake of recent economic challenges. The renewed interest from investors is a positive indicator for future growth and stability in Charlotte's commercial real estate landscape. This rebound in Charlotte's office market can be seen as part of a broader trend of recovery and transformation within the commercial real estate sector. Similar patterns are observed in other regions, such as Kitchener-Waterloo in Ontario, where office leasing and investment activities are also gaining momentum. This cross-border relevance underscores the interconnected nature of the real estate markets in North America. As Charlotte continues to attract significant investment, it will be interesting to see how this momentum influences other sectors within the commercial real estate market, including multifamily and retail developments. The positive shift in the office market could have a ripple effect, fostering growth and new opportunities across the board. The current climate in Charlotte serves as a case study for other cities aiming to revitalize their office markets. By examining the factors contributing to Charlotte's success, such as strategic property acquisitions and increased leasing activity, other regions can implement similar strategies to bolster their own commercial real estate sectors. In a significant move within the commercial real estate finance sector, 44 Oak Capital has announced the expansion of its platform with the launch of a new private equity fund. This fund is primarily focused on multifamily and hospitality acquisitions across the United States. Since its inception in 2022, 44 Oak Capital has successfully originated over $5 billion in commercial and residential loans. The firm is well known for providing commercial real estate financing, which includes bridge and permanent financing for commercial properties, as well as residential investment loans for fix and flip projects, ground-up construction, and rental properties. The newly launched private equity fund is designed to deliver exceptional returns for accredited investors through sourcing and acquiring value-add commercial real estate investments. The fund places a strong emphasis on hotel and multifamily properties in select metropolitan areas, aiming to create vibrant and inclusive communities through strategic property improvements and management. Frank Muradov, the chief executive officer at 44 Oak Capital, emphasized the firm's commitment to providing reliable and competitive deals and capital to both commercial and residential real estate investors. With over 15 years of experience in investment management and operations, Muradov has been instrumental in originating more than $3 billion in debt and equity deals throughout his career. Prior to founding 44 Oak Capital, he served as chief operating officer at Park Rock Capital and as Senior Vice President in Investor Relations at Veloci Capital. In support of its expanding network of mortgage and commercial brokers, realtors, lawyers, and real estate professionals, 44 Oak Capital has developed FundingTape.com. This is an artificial intelligence-powered turnkey white label platform that allows brokers to access 44 Oak Capital's lending platform for quicker processing and more efficient deal flow. In a groundbreaking initiative reported by Emma Wozniak from the Columbus Dispatch, Chicago Trend, a real estate investment company, is offering Columbus residents the chance to co-own the historic Mount Vernon Plaza through a crowdfunding campaign. This initiative seeks to raise $100,000 in public funds by November 26th, allowing local investors to contribute to the revitalization of this once thriving shopping center located at 1040 to 1060 Mount Vernon Avenue. The project aims to transform Mount Vernon Plaza, which has suffered from neglect and crime over the years, into a vibrant community hub once more. The redevelopment plans include renovated retail spaces, affordable housing, and support programs for local entrepreneurs. The minimum investment is set at $1,000, providing an accessible entry point for community members to engage in real estate ownership. Lynir Richardson, the chief executive officer of Chicago Trend, highlighted the historical significance of Mount Vernon Plaza as a cornerstone of the Black economy in Columbus's King Lincoln-Bronzeville neighborhood. The initiative not only aims to restore the shopping center's former glory, but also seeks to empower the local community by fostering economic participation and reducing the racial wealth gap. Sean Grant, chief financial and administrative officer for the Columbus Partnership, expressed enthusiasm about the community ownership model, which he believes will instill pride and a sense of ownership among residents. This project is anticipated to serve as a catalyst for similar initiatives across Columbus, promoting community engagement and economic development. Chicago Trend's vision includes a reactivated public park, new retail spaces, and a 47-unit multifamily affordable housing building. The company plans to maintain ownership for 10 years, projecting a return on investment of over 200% by the end of that period. Investors will also receive annual revenue shares from the property, with regular updates provided through quarterly virtual meetings and an annual in-person session. This initiative offers a unique opportunity for lower-income individuals to gain financial literacy and investment experience. By involving younger generations in the process, it fosters a culture of economic empowerment and generational wealth building. The project is set to complete its property acquisition by Thanksgiving, with the first stores expected to open by the end of 2027. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.